everyone. This is Vishal from EQUITY.GURU, and welcome to another edition of Chart Attack. This is for all my commodity fans out there. Let's take a look at like a very, multiple commodity markets. We'll take a look at the gold market, silver market. Let's take a look at oil because I think there's some really interesting developments there. Uranium as well. We can take a quick look at as well because I know a lot of fans. There's a lot of uranium bulls and fans out there as well. And we'll also take a look at the copper market as well. We'll just throw that in, with the metals there as well. But firstly, I want to start with this chart, which is that DXY or the Dixie or the US dollar index. And a lot of the strong relationship between the US dollar and commodity prices. Obviously, if you're a gold or a silver trader, then what happens in the US dollar impacts those commodities quite a lot because there is that negative correlation. When the dollar goes higher, gold heads lower, and vice versa. And I think there's been a very interesting development in the US dollar post Fed meeting, post GDP, all that other data, inflation data. But, we've had this big sell off in the dollar back in July after the Fed meeting there. We even broke below 100, which is a major psychological number there. And then the dollar began to gain some strength. And, a lot of people said, okay, this is just one of those relief rallies. And when we get back to retest the broken down zone, in this case around 102, which used to be support, now turned resistance, that, the sellers are going to step in and then we'll continue to sell off. So I'm just going to look for where'd that go? Where's the arrow? I can't find my arrow thing there. But essentially, you had some rejection here. You even had this pin bar candle here as well. So it did look like, the sellers were stepping in here and potentially we were going to continue the downtrend lower. But instead, we got a massive fat green candle breakout there as well. And to me, that's quite significant because now instead of retesting previous broken down support, we've sort of failed. We did fail that retest. And this is now setting us up for a potential gain in the dollar. And you can even see from this candle, once we retest the broken out zone, actually two candles here and here as well, that the buyers are now stepping in. So this is now acting, 102 is now acting as support. And currently we're seeing quite a nice rally here. We might even be ending off the week with a dollar breakout, which would set us up for an interesting week following. There is some resistance here at 103.50, so I would consider that as the next target. But the major zone is up here around the 105 area. So if you're a commodity trader, this is quite important. This price action that we just saw in the dollar, because it does look like we are going from lower highs and lower lows to higher highs and higher lows. But I won't get too technical here. But the reason why I did call out 103.50 zone is because that is the lower high we were actually working with on the daily chart, on the long-term chart. So as long as the dollar is below 103.50 here, this area here, then technically the downtrend is still intact. So there's going to be a big test of this zone, in coming days. To break out above it, then the dollar might have quite the decent rally. It could be because of the Fed remaining hawkish, maybe markets perceiving that there's going to be more interest rate hikes that haven't been priced in just yet. Or it could be some other reason, right? Maybe something, a fear move, right? Something happens with banks, geopolitics, I don't know, which just runs or causes fear and see people running into the safe haven, which is the US dollar. So keep an eye out on, this move here and what it could potentially mean. But with a stronger dollar, we got to take a look at the gold charts. And with a stronger dollar, it means potentially a weaker gold price, right? So we talked about this breakout way back in July, mid-July here. Again, just as the dollar was breaking down, gold was breaking out higher. We had a nice breakout of 1940, higher low retest, but gold just could not take out that 1980 zone here. You can see here it was actually quite a resistance zone here. You can like connect the dots here or connect the lows and the highs, and you can see it is a very, very important level. And just recently, we actually closed below 1940. So at the start of August, we closed below 1940. You can even see here on the retest, we saw sellers step in. So what was once support has now become resistance, and the sellers are just taking control. And every time there's a bit of a burst up higher or a relief rally here on gold, which you can see from these long wicks on top of these candlesticks here, the sellers just keep jumping in. So we see some strong selling pressure here on the on gold, sorry, and we are now getting close to the support level here around 1900. If that breaks, so if the dollar takes out that 103.50 zone as we talked about, and if gold breaks below 1900, we're looking at around 1820 here for gold as well. So I'm just going to get rid of this because that was a line I was looking at for a breakout, which didn't happen. And that's why sometimes it's important to wait for these breakouts. But I just want to show you the price action here on the weekly chart. We've talked about this trident or this, this three trend lines here, which have acted as really good support and resistance levels. We had that breakout above it, which is very important, but we just could not take out the previous record highs here on gold. But price looks like it's set to close back under these trend lines here, which might lead to some downwards pressure, but something to keep an eye out on the weekly chart. You can sort of draw a flag pattern here as well. So maybe it's just gold just bouncing in these channels, which means this is just a bit of a consolidation in an uptrend here. You can see we still have higher lows and higher highs here, which means that potentially we could see price action acting like this, where we just bounce around these levels, and then we finally take out the upside of this trend line here on the weekly. And, this could come with the dollar move. And I just want to sort of throw out there, of course, a lot of people have been talking about BRICS and that gold-backed currency that they've been talking about. And apparently it's going to be introduced this month in the BRICS summit in South Africa. I think it's on the 20th of August or something in about 2 weeks' time. A lot of people are saying that that might be something that could be very bullish for the gold market. So maybe in 2 weeks' time, this is what plays out. So just keep an eye on that because, like I said, technically on the larger time frame, we are still in that longer uptrend. And this is just a channel that I think we should keep an eye out on, the flag pattern, sorry, that I've just drawn out. Silver, we still on the longer time frames have this large or this long uptrend trend line still intact, right? We have multiple touches here. I like to look for 3 touches at least. So as long as this is still intact, the uptrend could theoretically or technically remain intact. There is some support here around the $22 zone, which coincides or meets up or matches this trend line here as well. So that's a price zone that I would watch. But obviously you can see silver also failed its breakout attempt here, where it gained some momentum and some steam, but the sellers came in quite hard, broke back below $24. And as I said, let's watch this $22 zone, which will coincide with the trend line here as well. If we take a look at copper, we had a nice move to $4. $4 is a very, very major psychological zone. Of course, you can see here on the weekly chart too, it's a very major resistance zone. And unfortunately, we could not get that weekly close above 4, and the selling pressure has just continued on silver. I think that's where a lot of sellers were going to come in at. Obviously, there's news about China and its deflation and its poor economy. China tends to move the copper markets a lot. And of course, copper is also known as Dr. Copper. So people think there's going to be a slowdown in the economy, then copper prices tend to do poorly and to fall. And as I said, China plays a major, major part in that. So copper is not looking too strong here. We've even broken below this trend line that I've just shown you guys now. So it does look like we're going to be heading back to the 350 zone here as well, and possibly 330 if the momentum continues. So what I would watch for is, some sort of maybe retracement and lower high. before we continue the trend or the downtrend here lower. And then let's change things up a bit. Let's look at the energy sector here because big moves in energy. Obviously, if you're a uranium bull, then you've seen the move in uranium. Very, very nice uptrend here. We've talked about this in previous articles about this major zone here on the 53.75 zone. We got that breakout. We got even a nice retest, which took us up to 57.67. And as long as uranium, spot uranium remains above 53.30 here, the uptrend remains intact. But again, I've written articles about this, a major range breakout here as well on uranium. So uranium just looks very, very bullish, man. Just from a technical perspective here as well. And of course, we have like some of those fundamental news, like what's happening in parts of West Africa there with Niger, which is, I mean, they're not like the biggest uranium producer, but they do have, a presence in the sector there as well. And of course, what it means to Europe and particularly France, who gets a lot of their yellow tape from that country there. So, those are some headlines which could be moving the markets here. But I think, in reality, it's just a supply and demand issue that we've talked about. I believe just yesterday it came out that Sweden wants to build 10 nuclear power plants as well. And that means that they're going to need more yellow tape. So as all these countries look to build more nuclear power plants, they're going to need uranium to power that, which means that more supply of uranium will be required to meet that increasing demand, which is what, a lot of uranium bulls have been saying for quite some time, and what is going to be the bullish, catalyst for spot uranium. So uranium, had a bit of a range here in an uptrend, but the uptrend looks to continue. And maybe by the end of this year, we will be around the $65, $64 zone here, which would take out these highs that we set in 2022. So energy looks good there in uranium. And I just want to look at the oil markets because this is where the real action's sort of been. Energy, oil didn't really do much between May to around July. It was just ranging down here. A lot of people were looking at the OPEC actions. A lot of people were looking at, okay, if there's going to be a recession, an economic slowdown, then oil's not going to do quite well because people aren't going to be driving around too much. There's not going to be too much economic activity. And then you have the seasonality people come, right, saying that summer is usually the best time for oil because people are going to take road trips, they're going to be fueling their cars, etc. So I find the price action here quite interesting as well. There are some people out there, and again, I'm not saying just quote me on this, but there are people saying that there's some of the oil pipelines in Africa have been impacted as well, which could be resulting in higher oil prices here as well. So I look at this as more of a technical thing where we had this breakout above 75 here. We even had a nice retest with a nice large engulfing candle and then a breakout above previous highs. So the uptrend there is continuing. I'm more curious about what happens now for oil prices because we did take out this high that we set in April of 2023. A bit of a fat engulfing candle, though, which we printed. So it does look like the sellers are not allowing oil prices to continue higher. But, the buyers on the following day are stepping back in. And usually when you see a large red candle, you want to see that momentum continue. I mean, you sort of see how strong oil has been. Every time we print these large engulfing candles, what happens to the price of oil, right? It just continues to shoot higher. So maybe, oil is just in a very, very bullish trend right now. But again, this just happened in a random place, whereas this engulfing candle is happening at a major resistance zone. So I pay more attention to candlesticks, especially when they happen at or occur or printed at major support and resistance zone. So let's see what happens here because if oil remains strong above this 84 zone, then we're going back to $90 plus oil. And just think about what that means for inflation numbers, right? I think that's something a lot of people who follow the oil markets are now sort of worried about is, okay, if oil made this turnaround, and you can see that, we've had this nice downtrend for a time being. We had this range here for a bit. Now it looks like we might be starting a new uptrend. So we might even take out these levels at 92, 93. What does that mean for inflation, right? Obviously, there's higher energy prices, higher fuel costs to transport goods and goods. Companies will have to charge a bit more to cover the increase in transportation. So I think that's something that will have a huge, well, what's happening here in the oil markets will have huge ramifications for the stock market as well. And there's already been articles about that, right? Saying, okay, now the stock market has to watch out for oil because if oil shoots out higher, then it means inflation is going to be starting to turn out higher, which means the Fed was going to remain hawkish, which means all these people that have been betting on the Fed, ending rate hikes will have to now change their, or will have to look back and decide if that's still the thesis they're going to work with, which might mean the market will have to reprice new information, which could lead to the markets heading lower rather than higher. People think the Fed is still going to remain hawkish if they believe that, or if the current narrative is the Fed is going to be ending rate hikes soon. So yeah, major move here in the energy markets, and I think it's interesting because obviously oil is a big part of the Canadian markets. So let's see if the TSX can get above this 20,800 zone if oil continues to move higher. And then, of course, got to look at the loonie because loonie, Canadian loonie, is also very, well, it moves or it's linked with the price of oil. But as you can see right now, this is US CAD. So when this is moving lower, it means the Canadian loonie is getting stronger. When it moves higher, it means the US dollar is getting stronger. So it looked like, we were about to see some loonie strength, and this was because of the bigger overall weakness in the US dollar. And as you can see, the dollar has sort of regained this major resistance zone. And let's see if the momentum here can continue. Because technically, this is very bullish, the US dollar. But if oil prices continue to get stronger and the loonie benefits from that, then if we get a close below 133.50, we can start saying that the loonie there is going to get stronger. But another currency I watch is also the Norwegian krona, just because it's quite linked with oil as well. Norway, a big oil exporter. So let's see a very interesting resistance zone here being tested around the 11.50 zone here on, I'm watching euro versus the Norwegian krona. And you can see some sellers are stepping in here, but this could be an area where the Norwegian krona could see some buyers step in and maybe benefit from the higher oil prices there. So there's multiple ways, to play the oil markets in currency through ETF. But I just think right now, just because of the recent CPI data, a lot of people are paying attention to oil because it might start to give those CPI data a bit of a surprise, right? Which would lead to a bit of a repricing in what people are expecting the Fed to do. That's it for me, folks. If you guys are bullish oil, let me know in the comments below where you think oil prices are going. Be sure to like this video. Be sure to subscribe. I'll catch you guys all in the next chart attack video.